Oh man, Robinhood is down almost 12% in after hours after sharing their first set of earnings since their IPO. Now, a lot of you may have watched that video yesterday where we break down what we were looking to see and what we were expecting from these Q2 earnings figures. And they've come out, and clearly something's happened because Robinhood is down 12%. If you haven't watched that video, go check it out because otherwise some of this won't make sense. But let's go straight into this and see what we expected and where this came through. So, a quick recap: what were we expecting? We were expecting an EPS estimate of 26 cents loss per share. Now, obviously, since this is the first time they're reporting, this is very difficult to compare, but we'll see what they produced in a second. We were expecting to see revenue increase. We were expecting to see net cumulative funds increase. Okay, this is what happened. So, let's take a look. So we can see here that their earnings are showing a $2.16 GAAP EPS. Now, it's difficult to decipher if this is a beat or a miss because it's the first time they're reporting. Okay, so it's not comparable to anything yet. So in the next quarter, we'll get an idea of how this is trending. But just as an absolute value, it's slightly on the higher side. Now, revenue, big beat on revenue. So they were expected at 559 million. They delivered 565 million, which is up 131% on the same quarter last year, which is Q2 2020. Now, this is almost so if you look at this, you got the breakdown. Transactional revenue, TBR, was 451 million, which is up 141%. Options came in at 165 million of that, so that was up 48% on the same quarter last year, remember. And crypto, which is a very big interesting trend which has come out of this earnings report, and I want to spend some time discussing this, came in at a staggering 233 million versus just 5 million. That's a 46 times increase on the 2020 figure. Okay. Now, finally, your net cumulative funded accounts, they were 18 in Q1, 18 million, and that's now 22.5 million. So a good 4.5 million increase there just on Q1, but a 130% increase on the same quarter last year. So overall, we can see it's, if you want to define it as beat and miss, a beat on revenue. We had a beat on the net cumulative funds, which is one of their key KPIs. We discussed that in yesterday's video. And the earnings per share is non-conclusive. Okay, but let's dive into more because this first earnings report is far more than just the headline figures you're going to see on CNBC. The stock is going to move. We know there's a whole bunch of momentum energy in Robinhood where it can drop 12% like it is now, but tomorrow morning it could easily jump back up 10% at the open. I'm filming this before the open. So, we don't want to take too much into that. That's going to move. But do we want to believe in this as a long-term play? In order to find that out, we got to look at these key metrics which we discussed and delve a little bit deeper. So let's do that. So we spoke yesterday about the monthly active users. We saw that in Q1 2020 it was 8.6, and in Q1 2021 it grew to 17.7. So we're going to look at that. And the same for the average revenue per user. Why is this important? Because we want to see the growth in how much users are spending. We want them to come onto the platform and then they should be spending more and more. They should be becoming better investors, trading larger amounts, and therefore the commissions should be higher, right? The fees that Robinhood are making should be higher. Now, this is really important in a technology business, which Robinhood is kind of straddling the old, your financial Schwab and Interactive Brokers, but they're trying to bring in a SaaS model with it. This is really important because Robinhood will be spending a lot upfront in marketing and branding. So their cost of acquisition per user needs to be eroded away by the increase in ARPU. Really important. So it was sitting at 137 in Q1 2021. Where does this come in? We're going to be looking at this shortly. So let's take a look at some of these stats. So the net cumulative funded accounts is proper mouthful, that one. So the net cumulative funded accounts came in at 22.5 million. So we said that's up 130% on Q2 the previous year in 2020. Now you've had your monthly active users. They have also increased. That's gone from 17.7 million, which you can see there, up to 21.3 million. And again, that's a 109% increase. This is a fast-growing company on the top line versus Q2 2020. The next one we wanted to look at was assets under custody. This is the total assets owned by the customers held by Robinhood on their balance sheet. So these assets under custody they were sitting at 80 billion. It's now in just Q1, it's now sitting at 102 billion assets under custody. To put that into context, that's 200% increase on Q2 just last year. Okay, that's a 200% increase. And the last one here was a slight disappointment because it's the average revenue per user. And we're going to touch upon this a little bit in a while because I think there's a bit more of an underlying concern here, and you want to stick around to kind of understand this a little bit more. It was sat at $137 in Q1 2021, but this latest reading is $112 per user, average revenue per user. That's actually down on Q2 last year. So this is a little bit of a concern because remember, what is the thesis of Robinhood? To democratize trading, right? So if you're democratizing trading, average revenue per user should be shifting up. As you bring in users, they should start spending more. And maybe this is a trend we're going to have to see over more quarters as people become more financially literate. I know Robinhood mentioned in this 8K release, they've started a series of educational lectures and courses which you can take. They've started a podcast. Okay, so I think they're taking this a bit more seriously around educating users after the GameStop debacle. But let's see how that trends up, because we want to see average revenue per user go up, which is indicated a more, retail investors are becoming more sophisticated. Their account sizes are growing up, right? And therefore it's sustainable. If people are just coming in, YOLOing options, losing money, and then stop using the accounts, we'll see that in the monthly active users field and the net cumulative funded accounts. And that's what we want to be wary of. Is this just a hype train? People are losing money. They're falling out of love with cryptos and trading, and off they go. That's not what we want. We want the long-term investors where they're becoming more educated and not just, using Robinhood as their first few trades for a couple of £100, $112, and then heading off to a Schwab once they start to learn and take it more seriously. They should be able to learn within this platform. And that's what Robinhood's going to have to back themselves to do. Okay, so moving on, let's look at the breakdown of assets under custody. So they didn't provide an updated table of this in this format, but to get an idea, we can see that they shared that 60% of net cumulative funded accounts traded in crypto. Okay, so this is very interesting. So we saw that 233 million was in crypto, so crypto's taking up a bigger share. And for the first time in Q2 this year, they saw that the majority of people signing up to Robinhood were making their first trade through crypto, not through equities. So this is a really important shift, but it is also a bear trap, which is what we're going to have to speak about in just a minute. Okay, so let's look at their revenues and operating expenses. So we saw that in Q1, if I just put that there like so, we saw in Q1 that revenue came in at 522, and we've known we can see we've grown that to 565, or Robinhood have grown that to 565. Now, what we wanted to understand, we discussed this in yesterday's video, is we want to see a bit of diversification away from the transaction-based revenues, the TBRs, because the TBR is a direct, that's coming through the payment for order flow, right? We spoke about this. This is the highly criticized, and this is under threat by Gary Gensler with his regulatory concerns. So we want to see that Robinhood have figured out how to gather revenue, meaningful revenue from other sources from users. And unfortunately, I can't see that. Okay, this is a bit of a concern for me. So we can see that revenue grew. We've discussed that. It's gone from 522 to 565. But transaction-based revenues went from 420 to 451. So they still make up 80%. Exactly 80%. Transaction-based revenues still make up 80% of the entire revenue pot. So if something was to happen to payment for order flow, if it became regulated or wasn't allowed to happen anymore, Robinhood have not proven to the market or investors that they are able to diversify away from payment for order flow. And this is a big concern. Okay, so again, we're going to have to come in the next quarter to take a look at if they've managed to do that. We saw Coinbase have managed to do this really well. They've moved away from their transaction fees. Well, they've not moved away, but they've shown that there's a few seeds that they've planted that could grow to be other earners for them. But I can't seem to see that in Robinhood here. I mean, other revenues have gone from 7 million there to 49 million, but it's still not meaningful. Still 80% of that revenue is coming from transaction-based revenues. And this is where we need to be concerned, because we know that is between equities and between crypto. And that's where the final risk is. And this is the reason we are down 12% in the market right now. Now, just before I get on to why we're down 12%, I just want to spend some time looking at operating expenses. Now, for any fast growing revenue company, I always suggest we look at the operating expenses. So if I move me out of the way, pop me up there, you can see that operating expenses are still sensible. So I've just done the calculation. Operating expenses are still 89, 88% of total revenue. Because normally what you'll see is as fast growing companies grow, their operating expenses can grow out of proportion of the revenue growth, and that's not sustainable when it comes to earnings per share further down the line when you're looking at it. But in this case, it's still improved. It was 99% this time last year, so it's trending the right direction. We just want to make sure none of that marketing spend or anything is getting out of hand. And interestingly, the marketing spend went down in absolute terms and definitely in a percentage terms since Q1. So you can tell Robinhood is getting enough attention anyway. People know who they are. They just need to ensure their product is keeping up to date with the customers, ensuring the education content is there to train investors to grow their accounts and ultimately, therefore, their transaction revenues. So why are we down? What's going on? Why are the shares 12% down in trading in the pre-market here? Now, I want to caveat this because we know the amount of momentum going into this. This could easily be up 10% tomorrow because that's the type of stock it is. So for the fundamental investor who wants to be in Robinhood, like myself, for the long term, it's a tricky time to kind of time your way into the market. You're not sure where it's going to move, but that's why it's really important we spend this time whilst we're unsure doing our fundamental research, getting an understanding of the company. So when we are ready to act, we can act quickly and smoothly. So this is what they said. So they're saying they're expecting a slowdown in Q3. And that's why the market did not like what they said. They said there's seasonal headwinds and they're expecting lower trading activity. So that implies lower fees and lower net cumulative funded accounts. Okay, so this is the concern. This is why the stock is down at the moment. They're saying, look, we had a tremendous Q1 and Q2. We had GameStop in Q1. Q2 saw the rise of Dogecoin, which made up a staggering proportion of their 233 million. And they even went as far as to say, if we cannot replace the hype around Dogecoin, do not expect crypto revenues to be the same. And so this is a worry, because crypto made up a big portion of the revenues, 233 million of the 522. And of that, a lot of it was made up through Dogecoin. So if we cannot find a way to if there's not another coin which comes up that gets the hype of Dogecoin, then it's going to be a little bit of a problem for Robinhood. And I'll quote you exactly right now what Robinhood said in a 10Q released after the bell. They said, if demand for transactions in Dogecoin declines and is not replaced by new demand for other cryptocurrencies available for trading on our platform, our business, financial condition, and results of operations could be adversely affected. Okay, so look, this is a concern. We know the Dogecoin hype was massive. It got a lot of people to sign up for Robinhood because they were quick and smart enough to add it to the platform. That probably helped, or it did help a lot in the growth in revenue and particularly the growth for crypto. That spoke a lot to the fact that we saw 60% of people signing up with trading crypto. It explains that. It also explains why the net cumulative funded accounts rose. And now we just need to see what does this Q3 figure look like. And they've already indicated after July and half of August trading, they already know it's going to be in a touch lighter. And that's why Robinhood is getting smacked. Now, if you're not a short-term trader, you're not a swing trader, and this is a stock that you believe in for the long time, then perhaps, and this is what I'm trying to evaluate now, perhaps this is a good entry point. It's a good first base to kind of test out where we're at. We came in an IPO at 38. It's always difficult timing it on an IPO. You don't know what's going to happen. It spiked up to 71 shortly after on that crazy day, and it was hovering around 48. We're at about 44 now. Could be a good first base if you have conviction in the stock to start nibbling and building a position. But all of this is not financial advice. So I hope you found that useful. That was a breakdown of Robinhood's first ever earnings release. Overall, looking good, but the direction they gave and the guidance they gave has left the market wanting a little bit more and feeling a bit concerned about the Q3 figures that are coming in. The stock is down 12%, but it could easily flip-flop. So hope that helped. See you in the next one.